This is the second part where we will prepare manufacturing account to figure out cost of production. In the first part, we calculated prime cost, yeah? So before you watch this tutorial, I'll recommend you, please watch first part, then you come back here. Otherwise, you will miss many things. Okay, great. So here, how to calculate cost of production? We know prime cost plus factory overheads plus opening work in progress minus closing work in progress equal to cost of production. Yeah. So prime cost we already calculated in our last tutorial. It is 198,585. Yeah. So let us write here prime cost first of all. 198,585. Okay, great. So now, first of all, we will write factory overheads. Okay, so let us write here factory overheads. Okay, so what are our factory overheads? So we are following a question taken from O-level accounting first paper. So we see here Hillary owns a manufacturing business. She has provided the following information. So first three amounts: inventory at 1st August 2022. So here we have inventories of raw materials, work in progress and finished goods. Then we have here for the year ended 31st July 2023. Then here at the end of the question we have 5 adjustments. Okay, we need to adjust this all to the relevant amounts, relevant item given on the question. So here we have many items which are related to factory overheads. Okay, so here first one we see wages of factory supervisors. Okay, we see here it is $29,000. Okay, so let us write here first item, wages of factory supervisors. It is actually indirect wages. Okay, so indirect wages are factory overheads. So let us write here wages of factory supervisors. So it is $29,000. We will write on the first column. Okay, so we will add all the factory overheads, then we will take in the outer column. Okay, then what we have here, we have here heat, light and power. It is $11,600. So let us write here heat, light and power. So we see here it is $11,600. Okay, so we will write here 11,600. Okay, but why here, why we did not write here? We have an adjustment related to this item. Okay, so here number 2 we see heat, light and power is to be apportionate 4/5 to the factory and 1/4 to the office. Okay, so we will multiply now 4/5. So this amount is related to the factory. Okay, and 1/5 is related to the office. So this will come to the income statement. Okay, so now if we calculate this, now what we get? We get $9,280. Okay, we multiplied $11,600 by 4, then divide the answer by 5. We get this amount. Okay, great. So what is our next amount here? So here we see rates and insurance. It is $8,250. Okay, it is another factory overheads. So let us write here rent and insurance $8,250. Okay, again we wrote here because we have an adjustment. So here we see number 3, rates and insurance is to be apportioned 3/5 to the factory and 2/5 to the office. Insurance $4,440 has been paid for the year to 31st December 2023. So 31st December 2023, we paid, okay, until this time we paid our insurance. So here our financial year ended on 31st July 2023, but we paid insurance until 31st December 2023. Okay, so we paid in advance. So for how many months we paid in advance? So here July is finished. So from August to December, August, September, October, November, December. So you paid in advance for 5 months. Okay, so now we need to calculate advance amount, okay, for 5 months. So here we paid $4,440 for 12 months. So how much will be for 5 months? We multiply here by 5. So here we see $1,850 we paid in advance. Okay, this amount must be subtracted from here. Okay, so great. So let us write here minus $1,850. Okay, this is the advance amount we subtracted. Okay, so now once again on the adjustment, what is written? Rates and insurance is to be apportioned 3/5 to the factory and 2/5 to the office. Okay, so 3/5. So now after subtraction, this amount whatever we get will be multiplied by 3/5. Okay, so now what we get? We get here after doing all this calculation $3,840. Okay, then what is our next amount? So here we have factory repairs and renewals. It is 5,125. Okay, this is also factory overhead. We need to write here. So let us write factory repair and renewals. So here we see the amount is 5,125. Okay, we wrote here because we have an adjustment. So here we see number 4, at 31st July 2023, a factory repair $644 was unpaid and no adjustment had been made. Okay, unpaid, outstanding, accrued area, whatever you see, you need to add this amount to this. Okay, 5,125. So this is unpaid amount. Now we will add here 644. So now if we sum up these two amounts, we get here $5,769. Okay, great. What you have, our next item is here equipment at cost. It is an asset. Then we have here factory equipment provision for depreciation. Okay, so we finished writing all the items here from this list of balances. Okay, now we see our adjustments. So here number 5, we see factory equipment is depreciated at 25% per annum using reducing balance method. Okay, so we need to write the depreciation here using reducing balance method. So let us write here depreciation of equipment. Okay, so here it is written clearly on the question, this business used reducing balance method, okay, to figure out the depreciation. So how does it work, reducing balance method? So here first of all we need to subtract the previous year depreciation from the cost of the non-current asset. Okay, here it is equipment. So equipment cost was here $124,000, and here on the question we see provision for depreciation given it is $35,500. Okay, we will minus this amount first of all because we will calculate our net book value. Okay, net book value equal to cost minus depreciation, you already know. Okay, then we multiply the rate by this net book value, okay, to figure out our depreciation for the year. So here if we subtract this amount $88,500. Okay, now we multiply the rate. So here on the question we see the factory equipment is depreciated at 25% per annum using reducing balance method. Okay, so it is 25%. So if we multiply, what you get? $22,125. Okay, this is our depreciation. So Depreciation is another factory overhead. So let us write here 22,125. Okay. So we finished writing all the factory overheads. Now we will add this all amounts. Okay. So what you get if we add this all? We get here $70,014. Okay. Good. Now we will add this factory overhead to the prime cost. Okay. So here we get 268,599. Okay. So this here factory prime cost plus factory overhead. We got this amount here total. Okay. Now what to do? How to calculate cost of operation? Now to this amount we will add opening work in progress, and from this addition we will subtract closing work in progress. Okay, then we will find our cost of production. So here on the question we see inventory at 1st August 2022. So here we see work in progress 21,357. Okay, this is our opening work in progress, so we will add here. So let us write here opening work in progress 21,357. Okay, so now if we add these two amounts, we get here 289956. Okay, $289,956. Okay, now from this amount if we subtract closing work in progress, we will get our cost of production. Okay, so let us write here minus or less closing work in progress. So here on the question we have closing work in progress. So additional information, number one we see here inventory at 31st July 2023. So this is the ending of the financial period. We have here raw material balances, then we have here work in progress. So here we have $22,446. Okay, this is our closing work in progress. So let us write here $22,446. Okay, so we will subtract this amount. So what you get after subtraction? So it is $267,510. Okay, this is our final answer, cost of production. So let us write here cost of production. Okay, so this is how you need to prepare manufacturing account. So if you combine these two parts, first part prime cost we calculated and second part cost of production. Okay, so in your exam you need to do all this together. Okay, so here I showed you step by step. So next tutorial will be for income statement. Here we will take many information to prepare income statement.